Financial. Thank you, and over to you, sir.
Thanks, operator. Good afternoon, ladies and gentlemen. Thank you for dialing into JSPL 4Q FY22 earnings call, hosted by JM Financial. We have with us the top management of JSPL to discuss the results. I will now hand over the call to Mr. Nishant Baranwal to do the introductions and to take it forward. Over to you, Nishant.
Thanks, Ashutosh, and thanks, Azam. Good day, everybody. Thank you, everybody, for joining us for this conference call to discuss our 4Q FY22 and FY22 results. Today, from our management side, we have with us our MD, Mr. V.R. Sharma. Also, we are pleased to inform you that we also have with us our CFO, Mr. Ramkumar Ramaswamy, on this call. Before going further, we'll request our CFO to say a few words.
Thank you, Nishant, and good day to everybody on the call, and a warm welcome to our conference call. This is Ramkumar here. I'm a chartered accountant with 25 plus years of experience across different organizations in different industries. I'm really pleased to be joining JSPL and working with them for delivering the future growth and profitability agenda. Thank you, Nishant.
Also, just to add, just to give you a brief on Mr. Ramaswamy. So, Mr. Ramaswamy has worked with Vedanta, Shell, Cadbury's, and such companies before joining us. And so he brings with him a wealth of experience to JSP. Going further, we have with us our MD, Mr. V.R. Sharma, and I would request him for his opening remarks. So.
Yeah, good afternoon, ladies and gentlemen. Welcome to this investors dialogues, interaction, and meet. We have done a wonderful job in the last year. If you see the last 3 years of our scorecard, right from getting into red list to black and from BBB minus to AA minus. So we have covered a great journey with the cooperation of everybody present here, and those who are not present, they also contributed a lot in the overall growth of the company. We started with 5.5 million ton in 2019, and 6.3 million ton production, then 7.2 million ton production, 7.6 million ton production, and now 8 million ton production. So we have done 8 million ton last year. Whatever we promised to the street and to our lenders, financial institutions, and to our shareholders, we have fulfilled. We took a target of 15, 15, 50, and 8 million. That was 15,000 crore and above should be the EBITDA, 15,000 crore or below should be the debt level, and more than 50,000 crore should be the overall revenues, and 8 million tons should be our production. So with the support of everyone, with the grace of God, we could achieve all these figures. And in some of the figures, we are much ahead of the expectations, and we have exceeded the expectation. Like the debt levels, they have come down to a level of into 4 figures, that is 8,500 crores. And now on 30th May, this has come down to less than 6,000 crores. So we are aiming to make the company to net debt zero within this financial year. And then we have overseas, the payments are about only $120 million. This will also be done, and then we'll not have any obligation in the overseas investments also. All of the overseas investments in South Africa, Australia, and Mozambique, they are doing extremely well. They are earning positive EBITDA there, and they are supporting the company, JSP, and they are supplying the coking coal, anthracite coal, and also medium wall coal to our company in India. We are also selling outside to the outside world as per the business economics. And now coming back on the last year, 15,000 crore EBITDA we achieved, and 56,000 crores of sales turnover we achieved. We did 7.64 million ton of sale. If you see the overall average EBITDA in the year, we already achieved to a level of about 19,800 rupees per ton. That is a simple mathematics dividing the overall EBITDA by the overall sales. So there was some problem in last couple of months. We faced some issues in terms of high input cost prices and some of the one-offs that we have done, and that's why you might be seeing the EBITDA level in Q4 is reflected lower, but in fact it is not lower. Instead of adjusting the books in all 4 quarters, our auditors, they did it in one quarter only, and we accepted their recommendations, and that's why you are seeing some pressure on the balance sheet of the quarter 4, which is actually not there. We are very comfortable. Now, coming back on the current situation and the geopolitical situation in the world, Ukraine and Russia war is still going on, and we do not know how long will it continue. And in such a situation, we are thinking that the market for the Indian steel products will always be there, and we will be in a position to export as much as possible. We did last year 2.56 million ton of exports. This year also we will do the similar amount of exports, about 2.5 million ton plus. So last year it was about 33% of the total sales. It will be this year maybe 30 or 31%. We'll try to achieve the same numbers that we did last year, maybe 2.6 million ton, 2.65 million ton. Now here the general questions are, what about the export duty? So we have put up our people on the job, the complete product development people, our R&D people, to find out those products in the market where the value addition is very high, and where the customer will be willing to pay us this 15% or little less. So I think this is going on, and we are working very seriously on this. Hopefully within the next 2 to 3 weeks time, we'll develop all those grades which are required in the international market, and those are true value-added grades where we can enjoy the market through value addition and value engineering exercises. So this is going on. Some of the products fortunately are not in the list of export duty, where the goods are surplus in the country or goods are not required by the MSMEs or by the automotive industries. For example, the welded structure, it is a very unique product. We are the largest producer of welded structure in the country. So we are going to export a lot of welded structure. Then we are going to export head hardened rails, grade 1080, 1175, and also the rails at 350 grade that is used in Europe, or say R260. So these are not covered under the export tax or export duty. So similarly, specialty high alloy round steel bars, round steel billets are not covered under that. So we have good market internationally. So we feel that out of 2.5 million ton, at least 2 million plus will be duty free, and balance 500,000 will be covered under duty. But those products will produce in 500,000 tons, which are very high value added product, where paying 15% duty by a customer will not be a problem. The other good thing for the exporters as a whole is we are when we discussed the orders, say in the month of February or beginning of March, these orders were at 74 rupees or 74 rupees 50 paisa per dollar, and today it is 77.5. So there is a net gain of 3 rupees for the exporters in India, especially to JSPL also. And with 3 rupees, if the average price of selling price is $800, so immediately 2,400 rupees comes to the company, and that is giving a lot of respite to the exporters in terms of exporting the goods. The other area is at least $50 to $55 per ton is the decrease in the prices in terms of the iron ore prices and pellet prices, because we are thankful to Government of India. They have imposed duty on export of iron ore and also export on pellets. So it's a good sign, and they also reduce the duty on many of the ferroalloys, nickel, and also on some of the duty reduction on coking coal. So put together, this effect is about $60, so that is about 4,500 rupees, and 3,000 rupees or 2,400 rupees we get from currency exchange rate. So net to net, we are covered by 7,300 to 7,400 rupees. That is close to $90 per ton, and that takes care of our export tax in case we have to pay. And wherever there is a non-payment of export duty, in those areas there is a benefit, and that will nullify the effect of export duty on some of the products. But we are interested only in exporting those goods which are not required by MSMEs in the country and which are not required by the automotive industries. Fortunately, today in our in our folio. We do not have the goods like hot rolled coils or galvanized material or color coated or galvanium or the roofing sheets. That is not our business. So we are not in this business as of now. Maybe in future we will. But today we are free from this business. So our business is affected least in terms of export duty levy, and we are getting the benefit of our a different product mix, which is very unique, right? From structurals to welded structure to rails to wire rods and also plates and coils of the special grades. So these are the areas where we can get the benefit, and we will try to nullify the impact of duty, either by way of the points I explained or by getting the additional price for the specialty products which are now developing. Our R&D team and our production team are working very strongly, very hardly in last 4 weeks time, and we are now working. Maybe in next 2 to 3 weeks time we will cover it. So in nutshell, the company is doing extremely well. The way forward is we have already initiated the capex. So we are at a point where there is no U-turn in taking U-turn in the capex business. So we have already taken exposure of about 7,000 crore. Most of the clearances from the Government of India and the state governments are already obtained. So the civil work has started in many of the areas, and the balance areas, the civil work is yet to be started. Hopefully by the end of this year, we will be in full peak of the construction. We have planned to cover the entire product line, the entire extensions by March 2024, as declared by Honorable Finance Minister, that the scheme for corporate tax rebate from 25% to 15% has been extended up to 2024 March. And we are hopeful that we will commission our plant by March 2024. So in the balance sheet of 25-26, we should be a 15 million ton company, and heading towards a bigger journey. Country as a whole is going to produce 300 million ton steel. The present measures taken by Government of India, we appreciate their concern. They have reduced the duties on many of the products. They have also imposed duty on the exports. We appreciate their concern, and we feel that these are temporary measures. Any government would like to take it in the interest of the nation. And we and JSP, we have taken a pledge that the product, the only single product which we are, which is required by MSMEs in our company, what we produce, that is wire rods, and these wire rods will not be exporting in the interest of nation. So this is what the total overall picture is. As far as the capex is concerned, as I told you, 18,000 crore is the capex envisaged. We are online, and there won't be any delay, and we will be completing our projects on time, and this is going to be the total scenario. We are hopeful that we'll be exceeding our expectations in times to come, and hopefully the company will always show the glitterness in market as well as in true sense in the overall steel business on the origin of the country. So thank you very much. In case of any questions, you are welcome. All of us are sitting here. We are here to reply you. Thank you.
Thank you, sir. Before we move on to questions, before the call, we have got certain common questions which we believe we'll take it up so that a lot of those questions for a lot of your people would be answered. Let me just start with the first one. The first one is regarding the EBITDA movement Q on Q. While I understand that you are seeing around about 3,750 rupees per ton movement on the EBITDA, would just like to throw some light on the moving parts. So in that EBITDA movement, there is a 300 crore one-off. It is a non-cash item, which is there, which you can point out. The other is on the coking coal front, the quarter-on-quarter movement has been close to $60 per ton of coking coal. While iron ore has remained flat, the cost has increased on account of thermal coal and ferroalloys to the extent of 1,000 rupees per ton. At the same time, we have got benefit of NSR going up to the tune of around about 800 rupees per ton. And because the volumes were up, we have been able to get an efficiency in for around about 1,000 rupees per ton. I hope that gives you the EBITDA movement across. Another question that has come up is the QOQ decline in terms of the EBITDA in foreign geography, that is Australia. So one of the things that we have noted in our press release also and would want to point out here that while the production was higher in Australia, due to the storm as well as some problem with the dispatches have been lower. And therefore, the net earning has been lower. Also, there is a $2.5 million one-off stock impairment charge, which is there in the Australian operations, EBITDA, which you are seeing. So these are two items.
The over and above, we were maintaining a stock of about 600,000 tons, that is 6 lakh tons in the plant and ports. Because of the movement of coal by Government of India from mines to different power plants in the country, so we were unable to get the rakes on time, and that's the reason that the 600,000 tons could not be sold. Had it been sold, then you would have seen different numbers altogether. And the another point I'd like to mention here, so that in case of any question you may raise later. So yesterday, Government of China, they have declared the withdrawal of rebate. They used to pay 13% exports incentives to the steel industry. They are withdrawn yesterday, and that has given a signal to the world that the steel industry in China will have to be at their own, and they will not have any support from the federal government of China in terms of giving them the export incentives. So that will stabilize the whole market in the international world. And today the good news is that today morning, Mr. Xi Jinping and his government, they have declared that from 1st of June, the Shanghai is being opened. So the Shanghai is being opened means from tomorrow, that means a lot to the world. A reason being because most of the user industry, most of the component manufacturing industry, they are located in and around Shanghai, and especially up to Wuxi. So Wuxi is the place which is under strict lockdown, and I think now after the lockdown is lifted, the domestic consumption of steel in China will increase, and the Chinese people will not look outside other than their own consumption. So the international steel market will stabilize, and India stands a great chance in filling the blanks and wherever the gaps are. Yes, of course, we have taken a decision, as I told you, that any product which can affect adversely the availability of the local steel, that will not export. Two products here, one is wire rods, the other is the rebars. The construction bars, we have taken a decision at our own, will not be exporting any construction bar, because that impacts the government projects, and it also impacts the general house builders. So we will not export any rebars, and will not export wire rods. So this is a voluntarily, and this is our self-regulated decision, and this will continue. Okay, please.
Just the last question which has come is regarding the Mozambique EBITDA. You'd be pleased to know that we have been increasing and ramping up production in Mozambique. While the EBITDA reported number is around about 12.3 million, it does take into account a negative charge of around about $14 million on account of foreign exchange for the loan which was repaid by it. So therefore, that is not, the EBITDA being reported does not reflect the good performance by Mozambique. So those were the questions which we had got. Operator, now we pass on to you, and then let's take the questions. One request is that please limit your questions to strategic questions. We at IR team here can always help you with the data questions.
Yeah, the questions, you might have got answers of many of the questions what you have listened from our side. Nishant and me both explained everything, but in case still there are some doubts or some questions there, please, you are welcome.
Operator, Azai?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Amit Dixit from Edelweiss. Please go ahead.
Good afternoon, everyone, and thanks for the opportunity. I have one question on...
Mr. Dixit, sorry to interrupt you. The audio is not clear from your line. Please use the handset.
Yeah, is it clear now?
Please go ahead.
Yeah. So, sir, the question is with respect to the arrangement you are contemplating with Diplo of Hungary. for supplying steel for this wagon wheel project. So just wanted to understand when we will be able to supply it, what's the approval process, and when should we expect them, whether it would an export-oriented unit or something.
Yes. So this is the rail wheel set business. We are working on rail downstream business for a long. As you know, Government of India is going to add more and more tracks, more and more rolling stock. You might have seen the news about 15 days back. The railway minister declared that they have ordered about 30,000 wheel sets on China. So there is a big gap today in India. We are looking for the right technology, and that is called forging grade rail wheels in 800 millimeter and 1020 millimeter diameter, especially for goods trains as well as high-speed trains. Since many of the high-speed trains are coming in the country under the tagline of Vande Bharat and also the bullet trains. So we are looking a future, and we are discovering a future in this particular product. As far as the approvals are concerned, the Government of India has a straight policy: you produce and you come for the approval. So no customer will give the approval first, and then we have to for the manufacturing. So what we will do, we are now working to put up this plant in Raigad, and this will be a downstream product, or you can say forward integration of our steel making. We are not going to add any steel capacity for that, but we will be doing forging, and we'll be making wheels for Indian Railway as well as for the private wagon manufacturers in the country, and also for exports, so wherever it is possible. So we are going with a very humble beginning of 25,000 sets per year. That is only 2,000 sets a month, and it is a very, very small plant, and going to be very prestigious. So we are working for the latest state-of-the-art technology from Europe, and GIFLO is going to help us in this business.
Okay, thanks, sir. The second question is on coking coal cost. While Dishant reflected on the cost increase in this quarter, can you guide us what would be the cost increase in Q1 FY23?
You see, the data are, of course, you all are very learned people, so you have all the data available time to time, but I will tell you, let's take a journey of about 14 months. So 14 months, right, 14 months from now, or before now, or 40 months ago, so we were at a level of $105 a ton FOB Australia, that is a benchmark, and from where the indexes start. And then, the journey started from 105 to 200, 260, 300, 350, 400, 480 for a long time, then 550, 600, and for about 3 weeks it was 675. So we reached to 675. And now the point here is how to buy and why not to buy and when to buy. So these are the areas. So all steel mills in the world, they keep on buying, because otherwise one day they'll go dry. We cannot stop the blast furnaces. So we keep on buying, and we keep on doing the averaging. So you being the investor, you know very well. So it is a SIP. So the SIP business is very well understood by everybody, that we invested in the SIP, so we keep on buying every month. So similarly, we keep on buying the coking coal every month. So the impact of the coking coal that comes all of a sudden when the market is at peak, and it remains for about 2 to 3 months at the same level. So unfortunately, from $520 to $675, this range was from November end to February, and that has come in the business, that impacted the business not only for us but everybody in the month of end of February and March, and also partly April. So that was the story. But all of a sudden, from 675, the market came down to as low as $385. We also bought at $385, and then again it started moving up, $385 to $450, $480, $520. So it remained stable for 5 weeks at $510 to $520, and now it has come down last 10 days time from $510 to $455 to $460 a ton. So this is the total, the product price, or you can say the total chart of the coking coal and the international market. So what is happening now? So now the prices are at about $460, $465 per ton FOB, and some of the Russian coal has also started moving in, which is cheaper by at least $50 to $70 per ton. So there is a little pressure on the international energy businesses, and the worldwide, the coking coal prices may either remain little moderate level or maybe at the same level in times to come. So we have positioned ourselves in a way that we are buying PCI coal and some of the anthracite coal from Russia, and we are buying majority of the coking coal from our own mines in Australia, South Africa, and Mozambique. If the need be, we will increase our production in South Africa and Mozambique, and also in Australia, and we will fulfill our requirement. So this is what we are aiming. So we are, I would say, we are pretty insulated from the topsy-turvy behavior of the market in times to come. Hope I answered your question.
Thanks and all the best.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, thank you for the opportunity. First question is on the captive coal block. So if you could just guide where are we as far as development of those coal blocks is concerned, and when do we expect commercial production, and what is the potential cost saving on that?
First of all, I would like to thank the Government of India for their very liberal approach in doing the privatization of the coal mines. And that is the need of the day. The last 8 years, it was a big problem. The new coal mines were hardly opened. Most of the mines were owned by CIL, Coal India Limited, and their subsidiaries. And the energy cost, energy prices, requirement of energy was increasing at a rate of 15 to 20% YOY basis. So now Government of India felt the necessity that we should now liberalize the coal mines and they should be privatized. As you all know, that our coal mines were cancelled by Honorable Supreme Court in 2014, and now thanks to Government of India, our whatever mines got cancelled, so we have got those mines also, and we have got in addition to those mines also. So now we have 4 mines available in our fold. All these 4 mines, we are thankful to government that they have considered us as a H1 winner, H1. So we have won these mines, and now the process is going on. We are talking to the ministry, and hopefully in next 1.5 year time, we'll be in a position to start production in all the 4 mines, and that will definitely bring a different cheer to the organization. And the major cheer will be in the sense of how to reduce the CO2, that is carbon dioxide emittents. So today, you know, the Indian steel industry through the blast furnaces route, they emit at least 2.6 ton of CO2 per ton of making steel. But if we route it through coal gasification and electric arc furnaces, then we can do it averaging. If we do 50% electric arc furnaces, 50% blast furnaces, then we can average it out to about 1.8 or maybe lower, that is 1.7 ton of CO2 per ton of making steel. So perhaps we will be the first company in the country and perhaps in the world where we will be generating or producing steel 50% to blast furnaces and 50% to the electric arc furnaces. There are no example in the world today that the companies, those who have blast furnaces, they also use the DRI. So we are the only company today. Our ratio is 40-60. To the electric arc furnaces, 60% to the blast furnaces. In times to come, we are going to add 2 more gasifiers, one in Raigad and one in Angul, a repeat of the Angul one. And this will be done the moment the coal is available through our own mines. The another area is we are thankful to Prime Minister, we are thankful to Mrs. Nirmala Sitharaman, our Finance Minister, and also Coal Ministry, that they have declared that there will be 50% discount on coal being used for the coal gasification. So this will change the fate of the company. Today, if you see in America used to be a surplus gas country. There the gas is at $9 per MMBTU. In Europe, it is $35 per MMBTU. In India, the gas is $25 to $35 per MMBTU in the spot market, and we are going to get gas at a price of about $3 per MMBTU the day we have our own coal mines. So this is going to change the entire scenario. The cost of production is 50% DRI, 50% hot metal through the blast furnaces. The cost of production will come down at least 4,000 rupees a ton. So I think that impact you will see in the balance sheet of 23-24 and not 22-23, because we are going to start our coal mine next year, and that will change the company and will bring the company to a different league. We'll be producing blue hydrogen also out of that, and this blue hydrogen will be used to pump into blast furnaces up to 15 to 20%, wherein we will reduce the coking coal consumption by 20%. So already these trials are taken by NMK and Severstal and one more mill in Russia and one plant, one blast furnace in Europe. So this is a proven technology how to inject syngas, that is synthesis gas, into blast furnaces and how to reduce the overall CO2 footprint. We are also pleased to inform you that we are the company today in India capturing the CO2. We are capturing every day 2,000 tons of carbon dioxide. Unfortunately, today we do not have the customers for that. We have requested Government of India to please put a hub, the CO2 consumption hub in Angul or in Paradeep, and then transport the CO2 to the pipeline. The Honorable Steel Minister, he has visited us on 28th of April last month, and he has promised that he will definitely work on this, that we will either putting up a CO2 consumption hub in Angul or in Paradeep. If it happens, then this will also change the fate of the company. We will be the largest steel company in the world. Please mind my words. We will be the largest steel company in the world in terms of capturing the CO2. Our aim is to capture at least 5,000 tons CO2 per day. And there are numerous products what you can make, be it soda ash, be it urea, be it many other chemicals including methanol from CO2. We are working very seriously in introducing the ESG concern, and we are addressing these areas in a much bigger way as a responsible company. You will love to have these products in times to come, and these declarations what I am doing today at 50% steel from electric arc furnace route and 50% of blast furnace route, and reducing 15% coking coal requirement to the syngas injection will be a milestone in the country and also in the world.
Sir, I just beg your pardon, sir. I just want this 15 million tons of volume capacity which we have of the captive coal blocks. What is the guidance for say FY24 and 25? How much will be producing in 24 and 25?
Your question is how much coal will be producing or steel will be producing?
No, sir. Captive coal, sir.
You see, as I told you, we have 4 mines now, and all these 4 mines, at least 2 mines will be fully operational. We can do at least 6 to 7 million ton coal from these mines every year. There is no problem. So total 12 to 15 million coal will be taking out from these mines.
In 24? FY24?
No, 425.
Okay. So just second question, on the previous question on coking coal, we got a very detailed background from you, but just in terms of numbers, given that we have a decent inventory, we have captive coking coal production as well, say in 1Q, any thought what would be the quarter-on-quarter increase in cost? And secondly, given the current situation of export duty and prices, what is your sense of NSR movement in 1Q over 4Q?
You see, the NSR has already come to bottom. This is my view, and with the China coming in a full swing, and the lockdown is being lifted, export rebates are removed, the war is still going on. We are expecting a great business from Ukraine in times to come, because Ukraine is to be rebuilt the day the war stops. So they used to supply about 35. They used to produce about 35 to 40 million ton steel a year. So this steel will have to be, replenished by somebody. Europe is not in a position to do it. America is not in a position to do it. Russia will have very strained relations. Hopefully, Ukrainian will not buy from Russia. So the only 2 countries left in the world are either Iran or India. So Iran is under sanction. So I think India stands great chance to supply to Ukraine. As far as the export duties are concerned, these are, as I told you, these are negligible. Having negligible effect because as I told you earlier that at least 7,000 rupees we are getting from cost reductions as well as from currency exchange rate, and balance the products what we are going to produce will be those products where the value addition is very high and the customer will be willing to pay additional price. So we will not be in a commodity market or the general steel market where the prices are low and over and above we pay 15% duty. We cannot afford. So this is what the business plan we have taken. And as I told you, we are not in commodity hot rolled coils or cold rolled coils or galvanized material. So we are least affected from this duty imposition.
So you just to get your message right, you said your prices have bottomed. So just want to know what is that bottom level, what you're talking about, that we'll see in 1Q versus what we have already reported in the fourth quarter. Yeah.
Yes, I tell you. You see, nobody can predict the market. The markets are always, market driven. As I told you, we are thankful to Government of India for imposing duty on export of pellets and export of iron ore. Nobody was knowing before 21st of last month, 21st of May, I would say. So it is imposed now. When it is imposed, then, all of a sudden the prices have come down. So when the prices have come down, the total economics has changed. It does not mean that the profitability has gone down. Yes, temporarily, yes, because the stocks in pipeline and also the stocks lying in the plant, they are of high value. And by the time the new price stocks, they do come to the plant and then everything is done. So it takes some time. So I cannot say that what is the absolute number today. Tomorrow, if these iron ore prices go down under 2,000 rupees, the impact will be more than 3,000 rupees in the steel prices. But that does not necessarily mean that that will be a loss of realization. It is not. So I think we should be happy that the country is stable. The demand is stable, market is stable. Whatever the input costs decrease will take place, we'll pass on to the customer as a customer-friendly organization. And if there is an increase, yes, definitely that will also be passed on.
Okay, thank you, sir, and all the best.
Thank you.
Thanks, Mangu.
Thank you. The next question is from the line of Kirtan Mehta from BOB Capital Markets. Please go ahead.
Thank you, sir, for this opportunity. You have sort of in the initial questions explained the EBITDA movement quarter on quarter. Would you also be able to sort of explain us how the net debt reduction has been achieved during the Q4 and FY22, and how do you plan to reach to zero net debt status over FY23?
I will reply.
So our CFO, Mr. Ramkumar. Okay. So I think from an inflow perspective, I think we had an inflow of around 5,400 crores. Yeah. And what were the primary drivers for this? There was a working capital release of around 900 crores, tax refund of around 500 crores, and of course, from an EBITDA perspective, we had 2,800 crores and export prepayment of around 1,150 crores. Yeah. So these are our primary inflows. From an outflow perspective, we had, ESOPs and dividends of around 600 crores, tax expenses of around 500 crores, interest of 229 crores, capex of around 800 crores, and loans of around 2,800 crores. Yeah. So I think that's the broad, summary of cash flows.
Ketan, I hope that answers your question.
Yes. Would you be also sort of lay down a path to achieving a net debt zero status? So how do you see the cash flow that will help us go down to the zero status from here?
I think purely from a business performance perspective, we expect to have a good performance this year. And we are going to use the cash that we generate out of EBITDA to really repay our debts. As our MD said before, we expect to be net debt free by the end of this year. I mean that's the ambition that we're working on.
Right, and the net debt number that we currently are indicating as of 31st May, is it after receiving the 3,000 crore of dues from the sale of cash from the sale of power business, or that would be in addition to that could also sort of support the reduction coming through?
So, Ketan, we would not want to comment on the 31st May number because it is not audited, and therefore we would stick to our 31st March number, which we have already said, close to 8,500 crores, 8,800 crores that we have already published. So we would want to stick to that number, but yes, there has been a 3,015 crore of cash consideration, which has come in as inflow into the company on consummation of the transaction.
Right, sir. And one more update in terms of the Cassia mine production. How is the production ramp up going on? Is the target of 5 million ton of production for Cassia mine still achievable for the year, or would you be able to better it?
We are on the line, and we will achieve 5 million ton as per our the permission obtained by us.
Right, sir. Thank you.
Thank you. The next question is from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good afternoon, sir. So I had a question on our pellet expansion. So now that exports are probably unviable, so would we think of deferring this pellet plant, to come in sync with our hot metal expansion, or we'll go ahead with the pellet plant expansion right now?
Hello. Yes, please. I will tell you. First of all, as I told you that the government policies imposed all of a sudden, that does not change the ongoing work. Because we know that the government policies are basically designed, drafted, implemented in the interest of country and the interest of mankind. So, but we don't have to worry about it because these are the temporary measures taken by any government in the world. But we have to see what Prime Minister has told to the morning. Please, you must have seen in all the newspapers that post-COVID, India is the fastest growing economy in the world. So with 300 million ton of dream, with $5 trillion of economy, with $1 trillion of exports, the government cannot go wrong. But yes, there was a need at that time that how to support the common people, and we appreciate that action taken by Government of India. Now coming here, your specific question on the pellets. First of all, the 18,000 crore project what we have envisaged, it is already under implementation. As I told you, we are at a level of no U-turn, come what may. So we have to do it. So in a way, it is good that during this abeyance time or during this ambiguity, we will complete our projects. By the time the projects are on, we'll be ready with the product. And we are not putting the pellet plant for exports because this plant is coming and the heart of plant, Angul plant. So Angul plant, when we are bringing the iron ore through the pipeline from Barbil or Kranjal or from Cassia mines tomorrow, and bringing to Angul through the pipelines, to the slurry pipeline, there is no point exporting this particular product from Angul to Paradip or Vizag or Gopalpur. So we will be using this product within the company. As you know that we are going to increase plant capacity from existing 5.4 million ton to 12 million ton. So for 12 million ton, the material requirement, the raw material requirement is going to also be doubled from 5.4 to 12, which is more than double. So we'll be requiring pellets for our internal consumption. The last 3-4 months, we are not sold, we are not exported any pellet in the international market. So we are consuming pellets within the company. So this new pellet plant will also be consumed, the produce of this plant within the organization. So hope I answered you.
Yes, sir. So also, if you just, I think I missed the volume guidance for next year, and basically, any particular segment that you see will drive this increase in our volumes.
You see, first of all, this last year we did 8 million ton and we sold 7.6 million ton. We had some stocks left over in the plant and port because we could not get the right logistics port. That was the reason, and that's why you are seeing the impact on the Q4 also, one of the impact. The other area is the production. We had a consent to produce only up to 8 million ton. Last year we got the consent extended to 9 million ton, and this year we are planning that we'll be doing at least about 8.6 million ton of production and 8.2 million ton of sales. So this is what our planning, and we are online. We will be in a position to do it. hopefully things will be much better in times to come.
Right, sir. Yeah, thank you very much.
Thank you. The next question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Good afternoon, sir. First of all, a very good presentation overall, which gives a lot of data from the presentation itself. Just a few questions on.
Sorry to interrupt you, Mr. Chheda. Please increase the volume of your device.
Yeah, now it is clear?
Yes, sir.
Hello?
Please go ahead.
Yeah. Yes, it is clear. Please, sir.
Yeah. Sir, on the opening remarks, you said some export incentives have been removed. I understand that has happened 12 months back. Is there any new thing which has happened in the China or on a certain product categories?
Yeah, it is a new thing. Therefore, yesterday the government has taken the decision.
So these are on which product categories?
There is a list of various products I can share with you. Nishant will share.
Okay, so this is over and above which happened a year back, where the all export rebate incentives were removed on majority of the products.
Yeah, I will share both the list with you. The earlier list and the exclusions in that list, these are covered now.
Okay, so this benefits you, and some products which I have included in list yesterday, JSPL makes that product?
Yes, we are, as I told you, first of all, we'll stabilize the international market. Secondly, they cannot export to any country where the local industry is very competitive. And the third is the overall sentiments, the worldwide sentiments, they do change with such kind of the government decisions.
Sure. So my second question was on earlier on the media interview. You were looking at EBITDA of roughly 18,000 odd crores in FY23 on volume guidance, which you have given close to 8.5. So which works out to more than 20,000 rupees a ton. When the steel prices in India have been falling, plus this incremental export tax. So where will that incremental EBITDA you think can come from? What kind of cost initiatives you think? What are the possible cost savings?
You see, I will tell you. I will tell you. You see, there are certain things which are always behind the curtain in terms of the strategies. So we can only reveal you a part of that, but we have a complete list that how to achieve the better numbers in times to come. So we are in a competition. We are in a competition not only with the Indian companies, but we are in a competition with the world. So we have to have certain secrets which we cannot reveal today. But yes.
आपण ज्या व्यक्तीशी बोलत आहात त्यांनी आपला कॉल होल्डवर ठेवला.
Hello, can you hear me?
Yes, sir. Please go ahead.
So we have certain strategies, products, how to position ourselves in the international market, and how to position ourselves in the domestic market. So those things you will know time to time. When we meet after 3 months, after in the next investors meet, then you will get part of that, a smell of part of that, and then you will get a much bigger fragrance after the third quarter, because that will give you much bigger, clear picture that how JSPL is different than others. So we will come back to you, but we assure you that you are invested in the right company, and will not let down you.
Appreciate that. Thanks a lot, sir. Yeah.
Thank you. The next question is from the line of Kamlesh Bagmat from Prabhudas Lilladher. Please go ahead.
Yeah, thanks for the opportunity, sir. One question on the part of, like, say, last quarter's guidance of around 20,000 rupees per ton. Even if I take 300 crore of one time, so EBITDA comes at 15,000 rupees. So, like, I'm really amazed to tell that, like, from a guidance of 20,000 rupees, we stuck at 15,000 rupees, and that guidance was at the fag end of the February. So by that time we were well aware of the cost. Like, say, we have been maintaining that we are carrying inventory for 3.5 months, much higher than the industry average. So what happened in this particular quarter?
I will tell you. Yes, you are right. We discussed in the last meeting, and first of all, maybe some confusion. I must correct myself and yourself. If you are right, then I'm correcting myself. My point of view is that the average EBITDA for the year, what it should be. So the last year, with the simple mathematics, I'm telling you, 15,000 crores of EBITDA with 7.64 million ton of production, that comes to over 19,800 rupees with simple mathematics. And we don't have any other income from anywhere else in the country. Now the coming back on the one-off business and as I told you, the 600,000 tons of stock which got stuck up in the, there was FG inventory which got stuck up in our plants because of no availability of rakes. So that has, created or skewed the numbers to south side. So that you must be feeling. And this is the reason I'm telling you that still today there was shortage of rakes, but now for the last 10-15 days the rakes availability has increased because the export of iron ore is banned by government. So the rakes carrying iron ore and pellets to port, those are stopped. So now the situation should be better. I think by July or by mid of August you will see not only our company but most of the steel industry will be at a very lean inventory in finished goods side. And once you have lean inventory, then it has direct relationship with the EBITDA level. Because when you sell more, you realize more, the money comes in, money flows in, and you get a higher EBITDA. So this is what we are aiming. But the point here is that we are treating the total EBITDA level in a year divided by the total sales. That becomes the total per ton EBITDA in thumb rule for a common investor and for a common person in the country.
And sir, secondly, on the part of like your coking coal cost, because as you maintain that we carry a good amount of inventory, so it would be very easier for you to like say guide us that how much increase in coking coal cost would be there for the quarter or change in quarter-over-quarter basis, because every steel company shares that data. And apart from that, how our NSRs or margins are compared to like what we did in the Q4?
I'll tell you one thing. You see, as I told you earlier also, the question was asked by some gentlemen, the energy prices, and I also told you that we are going to be in 50% using the domestic coal in making steel and 50% imported steel. Out of that 50%, at least 27 to 28% or 50%, or say of the total of 100%, that comes from our own captive mines. And now those mines are also independent entities, and we have a price formula with them. That from index, that is the index price, and with respect to the index, depending on the quality, services, delivery, from moisture level, ash level, and the sulfur contents, what should be the price to JSPL, and this is what we are working with them. Now, as far as the overall cost is concerned, today, as I told you, from $520 about 5 weeks back, and today is $465.